Hello traders, welcome to another episode of technical analysis here at Snipe the Trade. I'm Orlando and I'm going to be talking today about the dollar index. As you can see, we are looking at a daily chart of the DXY, which is the ticker of the US dollar index. So basically what we want to talk about is this part of the chart. Since the beginning of February, so basically for about a month, the US dollar index has been moving up very slowly inside this channel. But what's important to notice here is that not only we are breaking that channel, but we are also making or trying to make a head and shoulders pattern at the top of a very important up move. If we look at the weekly chart, you can see that we have moved from 93 in June 2016 to 103 plus 103.9 earlier this year in January. So if we go back to the daily chart, you can see that we are in fact making a very big or massive head and shoulders on the daily at the top of a very strong up move. Now, I'm not going to get into politicals or the Trump administration, or I'm not even going to talk about the Fed's monetary policy. I'm just going to look at technicals. And this chart is showing me that we do have some bearish pressure around these levels. Now, if we look closely, let's put on a horizontal line around these levels. And let's drag it down. You can see that where we made the first shoulder late 2016 is right here at the 101, 102 level. Now, we didn't hit those levels, but remember that support and resistance are not straight lines, but actual zones. And you can see that we tested this zone once and twice on the daily, and then we made our price printed very strong rejection candle, a very strong tail, a very large tail doji, and another indecisive candle when we tested it again. So basically this is where we are at on the daily, and I'm going to zoom in to the 6-hour chart, and I'm going to look at that flag right now. So basically this is the 6-minute chart. Okay, and this is the flag, that we were talking about on the daily. You can see that we have been moving down, and then we moved up for about a month very slowly inside of this channel. Now, what I want you to notice is that we actually broke to the downside, rejected it, and then we closed outside, and now price is moving up. Remember that this is the 6-hour chart, so you're not going to see very strong and momo moves on this chart. If we go to the 50-minute chart, you're going to see some very strong moves to the downside and then retracements to the upside. But what I want you to focus on is this very massive bear flag that we are at. So we went from the 103 from the 103.90 level down to the 99.20 level, and then we started to move up inside of this flag. So basically we were not looking to buy the US dollar. We were looking, or we are still looking, for sell opportunities, and right here at the 101 zone is where we are looking to start selling that dollar. And the instrument of choice is going to be the Euro US dollar, because if you follow our newsletter, you will remember that a couple of days ago I sent out a chart on the Euro US dollar and the rejection to the 105 level, which was the 61.8% retracement of the entire move up. Yes, from the entire move up. So basically, well, if you want to follow our newsletter, just go to snipethetrade.com and enter your email, and you're going to start to receive it. So basically what I want you to notice here is this zone. So I'm going to grab again a rectangle, and I'm going to point out where this zone is actually at. Here, this is the zone that is going to be our first level of support. You can see that it was previously tested as resistance. We broke it to the upside, and we tested as support. And right now that because we're breaking this flag, we might also test it as support, and it's actually the 50% retracement of the entire flag. Now you can see that we have the 100% here, the 0% here, and right here we have the 50 right at this previous base. If we break with this previous base, we are going to be testing this previous area of support at around the 50 level, which confluences with the 100 level, which is a very important psychological level. So basically what I'm looking at is a break of this previous base and a real test of that 50% and the 100 level. Now you may notice that this is the 50% of the entire move up from the let's go back to the daily chart, and I'm going to show you the 50% that we are looking at the 100 level right here is actually the 50% of the move from the 99 level to the 100.9 level. So basically we have two Fibonacci retracement levels here. The big ones and the ones that are colored are the Fibonacci levels of the entire move to the upside, and the small ones inside the colored ones are the Fibonacci levels of the flag only. So basically we're looking at the 100.5 level for a retest of the previous base, and the first targets of the break of the flag at around the 100-9978 or 9975 level at the 50% of the entire move up. But basically what we are really looking for is a retest of this massive area of support. You can see that we gapped up here and we tested it with a huge rejection, and again we tested it where the flag started. So basically what this tells me is that we do have some very strong buyers positioned here, and of course short time sellers are going to be taking profit also, which creates a very strong bullish pressure in the US dollar. Now when this flag really breaks, because right now we are still trading inside of it, to the very edge of it, if we do get a strong breakout, we're going to be looking to get again long on the US dollar and maybe short on the long on the euro US dollar and maybe short on the US dollar Japanese yen. Right now we do have an open position on the euro US dollar, a long position that quite frankly is at break even, but we are waiting for the London session to kick off and the New York session to kick off to see where this is going to go.